Most rich people in the world, they don't have their money in gold. Gold doesn't generate yield, right? Gold is a dead rock.
In today's video, Michael Saylor, Executive Chairman of MicroStrategy, discusses Bitcoin ordinals, transaction costs, MicroStrategy's long-term vision, and the future of money.
If I was trying to do the best thing for the world, let's forget about the US. I mean, look, the best thing for the world, the best thing for the US, I think they're the same, but let's just say I was trying to do the best thing for the world. Well, the best thing for the world would be if you defined a digital currency, a digital commodity, a digital security, a digital token, right? Even a digital art. A digital token might be fungible, like Tom Brady token, 52,000 super fans. And digital art might be Tom Brady's one and only portrait. He's going to pose topless once in his life, and he's going to sell that online, right? Digital art. If you defined all those terms, and then you defined a digital exchange that traded all those things, and presumably a digital custodian that could custody those things, then if you're in a country, if you're running the country, you actually lay out a set of rules in that country. This is how you register and get and issue a approved digital token, digital commodity, digital currency, digital security. These are the rules. If you're going to, for example, issue a digital currency, like we've got them, a stable coin, you can do it, but A, you have to disclose every week. B, you can only back them with maybe sovereign debt. You can't back them with Siberian real estate or yo-yo tokens. And C, you can't take on other leverage. You can't rehypothecate them. And D, these are the controls you have to have or not have, right? I mean, is it going to freely circulate or not? So those would be the rules, and that will be the political debate. If you go to digital currency, or sorry, digital securities, you would say the same thing. You would say, you know, if you want to issue a digital security, these are the rules, these are the disclosures, right? And now the issue is, are they the same disclosures that Nike has to make or Apple has to make? Are you going to create a fast track, different definition or not? Well, one can imagine that the disclosures that General Electric, the conglomerate, has to make would probably be a bit deeper and more nuanced than the disclosures of a utility token, you know, operating on a whatever network. So you would create that, and then you would have a path to register, and then you would have, you know, securities laws that control. And if someone lies, I mean, the real issue, let's take Tom Brady token. The real issue is, should Tom Brady be able to sell 50,000 superfan tokens? Yeah. So what happens if Tom Brady sells 50,000 superfan tokens and then goes through a divorce and decides to issue another 50,000 superfan tokens in the divorce secretly, but doesn't tell anybody, and then dilutes the value of the first 50,000 superfan tokens? Do you have cause of action as an early securities holder, right? And are you protected? And does Tom, by the way, there's a joke in the software business, right? And the old joke when I got into business was, what's the difference between a software salesperson and a used car salesperson? And the joke was, well, a used car salesman knows when they're lying. Okay. And you could apply the same joke in the crypto industry. You could say, what's the difference between a crypto promoter and a used car salesperson? Well, at least the used car salesman knows when they're lying. Okay, when Tom Brady issues the 50,000 Tom Brady tokens, and then he issues another 25,000, does he know enough to realize that that was inappropriate, right? Right? Is it clear that for example, if Tom Brady says, you know, you get to join my super chat group and show up to my barbecue once a year, you know, and you get all these special privileges, and then if he changes the privileges after the fact and the token crashes, is that a securities law transgression, right? Is he allowed to do that? You see, securities law is like for him, I can't tell you, like if you said, ask me about MicroStrategy, I can't tell you how many shares there are, and then a month later change the answer secretly, right? That's why everything is done via a disclosure, an 8K, a 10K, right? Because you want to be very precise. If you were to ask me a very precise number and I accidentally gave you a number which was 10% off, and then you traded on it and then you lost money, right? You would claim I misled you. So if we want these digital token industries or digital securities industries to be resolved, we need two things. One, you need a taxonomy, a definition of what they are, where people agree. And then B, you need to get over the political resistance, because there are disenfranchised groups. There are some people that don't want you. They don't want to lose custody. Who's custodying the $100 trillion of equity assets right now that are security, right?
Yeah.
Not you, not the crypto industry. So I think that ultimately you're what's clear is this: you're not going to get that progressive digital assets framework from the regulators. 2 years ago, I couldn't have told you that. Like 2 years ago, Ron, it was unclear whether you would or you would not. But I think now, in the last 12 months, I think we can see we're not going to get a bulletin which says, here's all the digital assets and here's what you do with them. I think that's probably because the regulators have concluded this is way too politically difficult a topic. So this is going to have to be a legislation, and it's going to have to be offered by politicians, and it's going to have to be bipartisan accepted legislation. I'll give you an example, right? Like I think stable coins are a cool idea, but clearly there's a faction in government that thinks that control of the currency is more important than availability of the currency.
Sure.
The argument in favor of stablecoin is issue hundreds of billions of it, and the United States dollar becomes the world reserve currency in South America, Africa, Asia, everywhere, and everybody uses the dollar. That's the argument in favor of it. The argument against it is issue that much currency and let it circulate non-KYC, then everybody's going to have access to the dollar, and we don't want everybody to have access to the dollar, right? There are certain people that we don't want to have the dollar, the people on the sanctions list. So that's a debate just as politically charged as the debate over a war, right? Should we be in the war or not in the war? I painted an idealistic future, then we've rolled forward over the last 2 years to see that there doesn't seem to be, there's no legitimate path to issue tokens, currencies, and securities to trade on digital exchanges in the United States. And we can see that the US regulators are driving the tone across the rest of the Western world. And so now you step back and you say, okay, well, look, I liked online gambling. I thought it's nice to play blackjack online and trade sports, and it was nice. I liked it. But the point is, it was taken away from you. Now the question is, as an investor or as an actor, what are you going to do? So everybody has to make their own decision. And if you're a retail investor in another country, look, if you are a retail investor in a war zone, right? If you're fleeing a war zone and there's chaos and anarchy, you might come to a conclusion that's different than if you're an institutional investor in New York City. So if you're an institutional investor in the United States and you looked at this entire thing and said, okay, well, what's the best investment? The answer is I should buy Bitcoin. It's undervalued. It's going up by a factor of 10 because it is not controversial, right? What's the use case of Bitcoin? It's universal store of value, right? That people talk about, I'm just going to focus on, this is a big idea, Ron, probably the biggest point I'm going to make on this podcast today. People talk about Bitcoin as the separation of money from state. That's not the biggest idea. The biggest idea of Bitcoin is separation of property from earth. The big idea is there's $950 trillion worth of wealth. There's $350 trillion worth of real estate property. A lot of the excess capital, what we'll call money, but it becomes capital, has flowed into property. We have monetized stocks, but we've monetized buildings, we've monetized commercial and residential real estate, we've monetized collectibles and art. And so the big idea with Bitcoin is instead of actually buying $1 billion building in the middle of a city, buy $1 billion of Bitcoin because the maintenance cost is lower. You can move it to any city on earth. The property tax on the building is clear and is going up, whereas the property tax on Bitcoin is zero and it's probably going down because it's very difficult to tax property in the form of a digital asset, right? It's very easy to tax your building, your warehouse, your house, and you can see that. So if you're an investor, you would say Bitcoin has a massive appeal. I mean, there's no reason why it shouldn't go from where it is today, from a $500 billion asset to demonetize all of gold. I've talked about that before. That takes it up by a factor of 20. But really, most rich people in the world, they don't have their money in gold. Gold doesn't generate yield, right? Gold is a dead rock. Most rich people in the world, wealthy people, they own property. They own city blocks in London. They own warehouses and strip malls and hundreds of thousands of acres, and they own skyscrapers. And why do they own it? Because they have to convert their capital into a property asset, which the government cannot print more of. And let's look right now, since MicroStrategy entered the Bitcoin space on August 10th of 2020, here's what's happened to asset classes. Bitcoin is up 118%. I'm reading off my screen right now, but this is pretty close. The S&P index is up 30%. So Bitcoin has outperformed the S&P by a factor of 4. NASDAQ is up 25%. Gold is down 3.5%. Gold is dead money. It has not gotten any boost. Silver is even worse. It's down 16%. And bonds are a disaster. They're down 19%. MicroStrategy stock is up 131%. We are actually outperforming Bitcoin, right? With all the volatility, regardless of, even though we bought Bitcoin at 60,000, 50,000, 40,000, it doesn't matter. What matters is the world's strongest asset class, as a monetary inflation hedge, the apex property of the human race is Bitcoin in the last 2.5 years. It's Bitcoin in the past 5 years, Bitcoin in the past 8 years, Bitcoin in the past 10 years. And theoretically, I won't drag you through it, but we could spend an hour during which I would explain to you, or I would enumerate the 100 reasons Bitcoin is superior to real estate, superior to equity, superior to gold, superior to silver, superior to credit, superior to corporate debt, sovereign debt, and every derivative idea you have. So if you're an investor and you simply want to make money and you want to do it without waging a battle with regulators, then you buy Bitcoin, because at some point, governments figure it out, institutional investors figure it out, big corporations figure it out. There's an avalanche of money. The liquidity's dried up, and you can't short Bitcoin anymore.
Why hasn't the penny dropped yet?
Well, two answers to that. First of all, they are figuring it out. The actual return on Bitcoin on an annual basis is running north of 40%, right? It's quadruple the next best thing, right? And if you're staring in 2020 at finding a non-sovereign store of value bearer instrument, and you're choosing gold and Bitcoin, gold is down 4%, Bitcoin is up 120%. So you could argue that that's pretty much figuring it out. They're figuring out at the fastest rate they can, and it's hard to go much faster. Now, I think what's holding back the market from even going faster is a couple of things. First of all, the asset class is embryonic, which meant that it has had prejudicial and toxic regulatory treatment. For example, the accounting is toxic. Indefinite intangible accounting is pretty much the accounting treatment you would put on anything you didn't want anyone to buy, right?
Yes.
Because what it says is you can only take losses. You can never take gains. There will never be an investment gain. There will only be investment losses. And if Apple stock had that same accounting treatment, Warren Buffett never would have bought Apple stock, right? And Berkshire Hathaway. So The accounting has been a bit prejudicial.
Is that
Banks
about
are
to
afraid
is that
to
about
hold
to
it.
change? Is that I know that there is an
Yeah,
effort to
yeah,
change the accounting rules. I know that you've come out in support of that effort to change the accounting rules. Is there
yeah.
any kind of reality under which that changes pretty soon? Because that's a massive barrier, and we've seen it.
It's a huge barrier for any publicly traded company and anybody that delivers balance sheet and P&Ls based on GAAP accounting. Yeah, so we've been working on this for 3 years, and FASB took it up as an issue, and it's been a project, and they've been moving forward with it. And the latest, and the community and FASB has overwhelmingly come to the determination that the proper accounting is fair value accounting. Fair value accounting means that you'll be able to take investment gains when Bitcoin trades up, and then you'll have investment loss when it trades down, and will be separate from your P&L and your operating results. So that is good, and that will be very supportive. We expect that toward the end of this year. Like I've heard a lot of
Wow.
people forecasting that might go into effect by the fourth quarter. And so I think that when we go into 2024, one of the
What is
bullish
hold on, what is
factors
the
driving Bitcoin is that accounting.
what is the next hurdle? So FASB support the hurdle. What has to happen in order for it to become the standard?
Yeah, so, well, when you say for what to become the standard.
For the new type of accounting where you can write it up and write it down. Not
Okay,
only
well,
write it-
FASB actually is the body that actually provides accounting guidance. So when they provide definitive guidance, then all of the public companies, all companies reporting GAAP financials will start to adopt that over some period of time, but maybe immediately.
But isn't that
So
the biggest
what I'm
thing
saying is by 2020, I'm answering your question. By 2024, we expect that probably that new accounting practice will go into place as of now.
Isn't that the biggest thing that could happen to Bitcoin? Because I think that's, to me, that sounds like it's the biggest barrier to getting companies to get Bitcoin on their balance sheet.
Yeah. I mean, it's a pretty big deal. It's if you're the CFO of Facebook or Microsoft, and someone says you should buy Bitcoin, it's toxic to your P&L, and it's toxic to your balance sheet. For example, if you were to buy $10 billion of Bitcoin and it traded down 50% and then traded up by a factor of 10, you would be showing $5 billion on your balance sheet, even though you have $100 billion. And then if you made $5 billion a year in your core business, you would be reporting that you made nothing, right? You would be reporting that the core business lost money or made nothing, and that you somehow lost 5 billion, and so the balance sheet wouldn't be right, the P&L wouldn't be right. All your investors would think that you screwed up the core business. They'd be angry at you. They'd probably call for your head. And so the opposite is, if you have fair value accounting, you would buy the Bitcoin. If it traded down 5 billion, you would say, well, our core business made 5 billion this quarter, but we had a $5 billion investment loss. And then the next quarter, you'd say, well, the core business made another 5 billion, but we just had a $5 billion investment gain.
Yeah.
And then, 36 months later, you'd say, well, the core business is chugging along stably, and we have a $100 billion investment gain, and we have double the assets. And so you can see that would make a big difference. Now, there's another point that I'd make here, which is simply having comfort in Bitcoin as an asset. And this is something that everybody in the crypto industry could do to help, that's beneficial to them and to the world, which is when the public thinks that there's no difference between FTT token and Terra Luna token and Bitcoin, if they're all equated as morally equivalent and technically equivalent and economically equivalent, then you have 25,000 cryptos and hundreds of other tokens. And so the confusion of separating the difference between BTC and FTT is pretty important. If a CFO of Facebook, if they see that the entire world says, okay, Bitcoin is an asset without an issuer, then the next question is, well, can I trust it with $10 billion? Okay, here's two answers. Well, Bitcoin is no different than every other crypto, and and Bitcoin is not environmentally friendly, and the energy is wasted, and so you should buy FTT token. Okay, that creates anxiety and confusion, and there's no way that the CFO of Microsoft is going to buy a $10 billion crypto token that's one of 10,000 that's backed by a team of 3 people. So that just paralyzes the industry. Now, there's another answer, which is Bitcoin is backed by 400 exahash and 12 and a half gigawatts of power. And that means that if the AIs took over every computer on Earth and they used every computer in the AWS network and every iPhone to attack Bitcoin, they couldn't dent it. It wouldn't even be 5% of the hash rate. You would need all the electricity on Earth, all the money on Earth, all the computers on the Earth to slow it down by 10%. And so Bitcoin is backed by the most powerful digital network in the world. It's a nation state resistant, fault tolerant, digital monetary network. And there is no one that controls it, and nobody can change it. No government and nobody, it doesn't matter. In that case, the CFO of Microsoft says, okay, I could probably put $1 billion on that network, right? So there's what we've had in the crypto industry is kind of a divisive, sometimes divisive, confusing debate. And the better debate would be to say, well, that's a digital security, that's a digital token, that's a digital piece of art, that's a digital currency, this is a digital commodity. And once you've done that, then instead of saying, well, I could just basically be a better Bitcoin, but I don't need to use any electricity at all, and I can gen that up. The problem with that one is you start with FTT token, and then you have Luna token, and then you have Yoyodyne token, and pretty soon when you've got 19,000 different tokens and they're all fighting with each other, you're not going to get the CFO of Microsoft and Amazon and Facebook to put $10 billion on the network. And actually, what should happen next is if you're Apple and you have $100 billion of capital, and you should actually buy $100 billion of Bitcoin, which will go up 20, 30% a year, such that you have endowed your corporation, you've benefited the world, you've benefited Bitcoin, you've benefited the crypto ecosystem, you've benefited your shareholders. For that to happen, they have to conclude that that this network is indestructible, immortal, right? Secure, incorruptible. And so as people start to get clarity, if they start to understand what Bitcoin is and what a great digital commodity network is, then you're actually going to have 10x more capital flow, and then 100x more capital flow. And then the entire crypto ecosystem goes from being $1 trillion thing to $100 trillion thing. When there's $100 trillion of capital, then the utility of every other idea, self-custody, digital exchange, smart contracts, all these other ideas, the utility goes up by a factor of 100. Now we're still in this issue of a debate about whether I want to allow your DeFi exchange to trade derivatives, perpetual swaps and derivative contracts on Saturday afternoon at the speed of light, 1,000 times quicker and cheaper and transparent. It's a good idea. It's just going to be a political fight. And maybe in the UAE, they'll let you do it. And maybe in some other European country, they won't let you do it. And that battle goes on for the future of the financial system.